you for joining me. My name is Mike Hamilton for Trade the Easy Way, and as I suspected last week, things were pretty boring until we got to the speech of the Fed chair on Friday, and it now looks as if we could potentially get at least one, but maybe even two rate rises in the US this year. So you're looking at the 20-year US Treasury notes. It's the ETF for this, and it's called TLT, or the ticker's TLT. So you can see 3 weeks out of 4 we've had lower closes. So I'm expecting this to come lower, which will increase bond yields and suggest that rate rises are on the way. So the market is convinced that we're in for 1 or 2 rate rises as well. Okay, on Friday we've got non-farm payroll. So again, we're going to have another week focused on the Friday data. We get some early US jobs data midweek, so that could liven things up as well. But I had a good week on the whole last week. I got a lot out of the US dollar yen, although I could have extracted slightly more. We'll go over that in more detail. In fact, I've gone over that in a separate email. I forgot. Separate video which I'll send you. Okay, and so let's just start looking across some of the other charts. This is weekly Dow, so we are not seeing a huge sell, but we are certainly seeing a distribution as the markets adapt to a higher rate environment or potential higher rate environment. So the trend line is down there on the weekly chart, so that would suggest somewhere around 17,000 and potentially lower. 17.9 is a support level, but where do I think it will end up? I think we will end up potentially coming all the way down to 17. If 17 doesn't hold, then could get into trouble. But if we can come down to this level here, this will keep us in the trend. And then so we can come down here into late September, early October, then we could get a bounce into the year end. We are in an election year, which typical election cycles are positive. Forces tend to hold the markets up in an election year, and so far, that's definitely been the case. After a damp start in January, February, markets have been very, very bullish. Pullbacks have been bought, so we are due a pullback, and that's exactly what we're getting. So if you are trading the indices or stocks, come to that. Look at the pullback for around about for anything from 450 to 520 on Monday. So take your time, let the markets come to you, and let's just see if we get that pullback. And there you can see on this daily chart we've got a 200 EMA down there at 17.8. So that would figure that could be a big magnet for these markets. Right, in the meantime, I have been getting very bullish the dollar last week, and of course that will now continue. This is the US dollar yen, which I was focused on in the room last week and spent a lot of time talking about this last week in the room. I was buying pullbacks, so you can see in the early part of the week we were just sort of buying the dips and selling the highs, and then Friday we had the breakout. So the 20 EMA, which is this one here, I'll be in the 200 here, 20 EMA here. This 20 EMA has now been breached. That's the first time we've done that. First time we've held above the 20 EMA since late August. So middle of August. We are late August now, aren't we? Sorry. So the pullback in this one is due. So we're 108. So 101.80. I would look for a good pullback, ideally under 101. But have a look around the 101 level. And 101 is certainly a good entry for a swing trade with a stop under Friday's low. And Friday's low was just under parity. So that's 100 pip stop if you are swing trading this. And that's certainly what I'll be looking for. so the trend line, as you can clearly see, is round about the 104 mark, and so I think 104 is the next stop. And then if non-farm payroll comes out good, we could see 105, and who knows, longer term into the autumn we might crank our way up to 110 and beyond, but let's just take it one step at a time. Last time we had a little run, we came into the top of this channel up here at 107 and rolled right back eventually to parity. So I'm looking for this to just stay in that channel short term until we get at least the next rate rise and potentially the second one. Okay, so let's look at the euro. Started shorting the euro on Thursday, which didn't work, and then of course we got the push right up into 350 and the close down to under 112. We're coming into the 2 EMA, so I would leave this be. I would hope we will drift at least back to 112.60. We may even push right back into that 350 mark, who knows? And at which point, if non-farm payroll is good, then I expect the next tranche down. So that is the trend line that we've got on the euro. I've got all the support down here around about the 110 mark. Right, so this is my. I much prefer the US dollar yen to this because of that 2 EMA support there, but we'll see how that goes. Pound. So what's the impact on the pound US? The impact is we are back down to the support level. This low on the 27th of June, so just a few, the following few days, well, following couple of days, working days after the Brexit. So we're back down to that support. So any pullback to 132 could get us back to these lower levels of 129, and the support level is 128. The channel would take us right down to potentially 125, 126. Okay, so I mean, I think this 125 could be quite a magnet. Nice big round number like 125. Alright, so you can see on this 4-hour chart that the 132, or just slightly above, is a good target entry. Pound yen, I like the pound yen. It's a nice liquid pair. I've got this trend line coming through the mid. This is the median of the pound yen, and we just almost came in contact with it on Friday. Probably just about to test it on Friday. So we have had a recovery from 130, nearly a 400 point recovery over about a week and a half. What we might do is spike higher and then resume the downtrend. The MACD is sitting up, it's crossing up, it's sitting up. So we might see some a push higher in the early part of the week, and then the reaction to, as we start to get some US jobs data, will be telling. So what's my plan on this one? Well, I would buy a pullback on this one. The yen is showing some decent weakness here, as we talked about in the US dollar yen. So I think the US dollar yen is a much better chart, but I still think this could come back to that bottom of that trend line before we get another leg down. The indicators, this weekly MACD is on the floor, and there is a degree of divergence with the histogram. And let's talk about gold weekly. Here, sorry about this lime color trend line. We are just narrowly coming under that, so I'd expect to see this to at least retest 130. In divergence with the pound yen, this is looking as if this could topple over and at least start to come down to 130 and beyond, and come and retest 1250. Oil. Oil has been impacted by the potential stronger dollar. A lot of talk on OPEC pulling in the reins on production to try and get this higher. So I've talked before about this coming up to 50 and beyond. We had 3 strong weeks and a pullback last week. I would look to see if 46, if we come down to 46, 45, 46 and can hold, then I think we can work our way up. So the jury's out on that one. If you are looking for, if you're in a swing trade on that, I would just manage your stop. Hopefully, if you're in a swing trade, you would have been taking some off at this resistance. So it is bullish. So the pullback to 45 looks as if that's a target for the next push into 50, 52. We're definitely seeing some pressure from the strong dollar and the euro coming off. And to me, there was a clear relationship between the euro and the oil. You know, this oil is obviously traded on the US market. It's traded in dollars, so you know, that recovery in the dollar is going to impact on this, and that is showing through on those charts. Right. Stocks. So just look at 1 or 2 bellwethers, and then I'll do a full Monty on the traders around table. Let's look at Barclays. So Barclays has done well. I will get rid of these lime colour trend lines. I do apologise for that. Barclays has done well. So if we bump into that trend line at 160 area, then we could come and see 180 and beyond. We've got a gap fill at 183 and resistance at 187. So if you want to trade that, look out for the 150, 160 area for a pullback. Let's have a look at Sky. So we held up last week. Just clinging on there. MACD is on the floor. I think this is a good stock, and this bar from late June saw this push up. So I think this pullback could get bought. You know, so climb this and resistance of 950 and pull back. I think that's got potential to pull up. We have got these moving averages coming through to the downside on the 200. So just see how we handle the early part of the week on this daily, and look to see if we get a retest of 850. Because if we do and we hold, I think we could break out of this trend line and come and see 10. Right, I'll go into much more detail at Traders Round Table. I will be looking at a couple of sectors I'm really interested in at this stage. So enjoy the rest of your weekend. I will be doing a Traders Round Table at 7 tomorrow night, but I'll keep it very short because of it's bank holiday. We'll have a day of trading behind us from the US, so that'll be interesting as far as the dollar's concerned. So that's what I'm looking for. That's my plan. Looking for some further weakness in the yen, further strength in the dollar, and looking to see how the stocks are going to handle this. Thank you for joining me, and I keep going on about the website, but finally, I've got my hands on the website now. my new developer has given me access to that, and I will populate that, and got some very interesting content and some really great ideas coming up. All right, thank you very much, and bye for now.